In this lesson, we're going to talk about divergence. There's lots of different kinds of divergence, but the kind that we subscribe to that makes a lot of sense and is very easy to see is by way of using a volume indicator. And what we'll do with this indicator, let's just take a look at this little move up here. How can divergence help us to identify when to take a short trade? We look at our volume indicator down here. Now, as the market is moving up, the volume indicator makes a cycle. It goes up, comes down, goes up again, comes down again. Easiest way to see divergence is when a full cycle is made. By that I mean it comes up above the zero line, back down to the zero line, back up, and then starts to come back down again. As you see the market move up, look for a lower high on the volume bars. All right? Lower high on the volume bars. As you go into this new high, when you're at a lower high on the volume bars, and as they turn negative, there's your short trade. Now we have a little indicator here that tells us where that specific spot is right there. Here's another example. All right, we have a lower low, higher low on the volume bars, and the market ticks up a little bit. Now here, as it comes down, we really don't get a full cycle. So this wouldn't be a real clear opportunity to use divergence because it really hasn't fully cycled. It can be measured, but there are other opportunities to trade that are much more clear. For example, as the market moves up in here again, we get a full cycle, drops below, comes back up, we're at a new high, but a lower high on the volume bars again. Nice little divergence, bars turn negative, and down she goes. Real easy to see. I mean, it's like taking candy from a baby. All right, now here again, not really a full cycle. You could see that there's divergence here, and the market ticks down. Here we don't have equal lows to work with, so we won't even mess with that. But again, it moves up into a higher high here, and you can see the volume has dropped off considerably. There's a clear case of divergence there, and the market drops. This is just so easy to see. Just so easy to see. All right, up we go. Up again. And there is some divergence here. We have a lower high here. And we're just a little bit early on that trade. Not enough to stop you out, but it's just a little early. The next little bump up is more successful. Look at these three lows here, and doesn't really quite make it down very far. I mean, we had a nice complete cycle there, comes back down. We've got several opportunities for trading. There's an obvious divergence there. Up she goes. Here we don't have divergence. All right. There we do, but it's not an equal or a lower low. But look at this. See how clear that is? Goes up, comes back down, goes up again. There's your first trade. Doesn't go very far. Whoops. Oop, I just lost that. Okay, here we are again. Comes up, goes back down, up again. That's the first trading opportunity. There's the next trading opportunity. Turns negative, just a little shy of the high there. but clearly comes down. Now here's a little more of a tricky situation. You see how this comes down again. There's a divergence, but the slope of the market is definitely down. So you could get kind of caught in a situation where you've got a divergence and yet the trend in the market is still coming down. So you definitely need to watch what your trend is when you're doing this. There is a trading opportunity, but it doesn't move very far before it comes right back down at you. So it's a little easier when you get a full, a real complete cycle on the volume. And let's see right here. Comes back down. There's no divergence there. Here again, now you're at a lower low, a divergence between these 2 points. Again, market doesn't go very far. All right, so be careful when you're using this when it comes to looking at the trend, because there can be divergences there which won't really pay off. So back to using the premium for verifying what the trend is at any particular time. So very simple, nice way to use divergence. And you don't necessarily need to use a 500 tick bar. You could use almost any other increment, but don't make it too short. You know, a 100, that's really short. It's really not enough to see what you're looking for. And you don't want to make it too long either, because then you don't have that many opportunities. But even 1,000 would probably work well. So that's our video on divergence.